Hi, Barbara Friedberg here, former portfolio manager and university investments instructor. Here to talk to you today about dividend investing. We're going to use M1 Finance as our example portfolio, but you can invest in dividend stocks on Schwab, Fidelity, Robinhood, Webull, you name it. So let's get started. What is dividend investing and why is it so popular? When investing in stocks or shares of individual companies, some of those companies choose to take some of their earnings and give those earnings back to you in the form of a dividend. When you receive that cash, you can either take it and use it for whatever you want, or you can reinvest it back into more shares. The reason people like to invest in dividends is because, in general, companies that pay dividends have a certain level of confidence that they are going to continue to be profitable and be able to continue to make their dividend payments. Although on occasion, a company will lower dividend payments or even cut them out altogether. In general, when you have a dividend paying company, it's pretty secure. So before we get into choosing those dividend companies and the best ones and strategies for you, let's just take a quick breeze through M1 Finance, learn what it is, why I like it, and why it is awesome for dividend investing. M1 Finance is an investment app. Super easy. You can use it on your phone. And what it offers is an all-in-one stock, ETF, and customized investment portfolio opportunity. So, for example, you can invest at M1 Finance in nearly 60 different type of investment portfolios. And that's where we're going to start with our investing in dividends today. Before we get into the different choices, though, I want to show you how I've used M1 Finance to invest in both a global dividend plan and also just a 60-40 stock versus bond portfolio. I elected to choose each of these pre-made, they call them pies at M1 Finance. And what a pie stands for is really a portfolio or a group of stocks. And I kind of was curious to do a test and see whether my dividend stock portfolio or my 60% stock, 40% bond portfolio, which one would perform better. So this is a picture of my holdings, my portfolio. I just invested $1,000 a while ago, maybe it was 2017. Then I put in, and I was initially just in an all 60-40 stock portfolio. Then I invested another $5,000 here in 2020, and that's when I elected to add in the global dividend portfolio. And you can see right here, 50% in global dividend, 50% in the 60-40. Let's look at what's in my global dividend portfolio and why I like it. And then we're going to go and look at how you can choose a dividend portfolio for yourself and the benefits of dividend investing and why M1 Finance offers something kind of cool for dividend investors. Okay, 5-year performance of this global dividend fund is a total of 66.48%. In this portfolio, there is exposure to global companies with larger than average dividend payments. This pie, the global dividend pie, which I chose from among the dividend offerings at M1 Finance, is built for people that want dividend income from global companies. You can, like I mentioned, you can take the dividend payments as income if you want the cash flow, or you can reinvest it. Right now, the dividend yield is 3.04%. And not only is that the current dividend yield, but you also might have the possibility of these stock company values going up in price. So you get the return of 3.04% plus any appreciation that you might gain from the value increasing in the companies. The expense ratio is 26 basis points or 0.26%, which is relatively affordable. This pie, the M1 Finance dividend pie, holds 52% in the Vanguard Dividend Appreciation ETF, the 22% in the iShares International Select Dividend ETF, 10% in Wisdom Tree's Emerging Markets Dividend Fund, then a Wisdom Tree Mid-Cap Dividend Fund, and a Small Cap Dividend Fund. So what you'll notice here in this dividend portfolio is that we've got U.S. stocks, we have international stocks, we have emerging market stocks, which are those smaller, less developed companies from around the globe. Then we have some mid-size U.S. dividend stocks, and then some small cap dividend stocks. So this is an all stock portfolio. There are no bonds in this pie, but it's probably going to be a little less volatile than a typical all stock portfolio because in general, dividend stocks are a little bit less volatile than you'll find with your high flying growth stocks. Now, if you want to dig even further into this portfolio, you can look here and you will get a description of this particular fund that is owned within the portfolio. And you can see its price, its range, its 52-week range, and a profile of it. You can get more information just by clicking on the website, but we're not going to do that right now because that's a little bit more than we're going to get into today. So that is my dividend portfolio choice. I just chose one pie with a variety of diversified U.S., international, large, mid, and small cap dividend stocks. You want to see how that has performed over 5 years? Well, it's gained 68%. Over 3 years, it gained 40%. Over 1 year, it gained 11%. And you'll see here, starting in January 2022, it's lost some value because we've gone through a stock market correction. We're not going to bother with really digging into the 60-40 stock bond portfolio, although you'll see that does offer a yield as well. This, let me get back there for a minute. Let's look at the 60-40. We're not going to spend a lot of time on this one. This portfolio over the time that I've owned it has increased 41.64%. And you can see here that it's comprised of only 2 funds, Vanguard Total World Stock ETF and a Vanguard Total Bond Market ETF. Now let's see, we've got cash flow. Okay, so it gained starting value on January 19th. Well, I didn't buy it till 2020. So, and my net cash flow was $3,087. It gained $663 since 2020, and it's earned $166 in dividends. Now, these are lower dividend paying ETFs, although we do get some dividends from those holdings as well. So enough about my portfolio. You can see kind of in action what I did. One of my pies was a deliberate all dividend pie and the global dividend. And then one was a diversified 60-40 stock bond portfolio. And together, 50% in the global dividend, 50% in the 60-40. Together, they equal 100% of all of my holdings at M1 Finance. And that's the cool thing, because you can create whatever type of investment mix you want at M1 Finance. But enough about me. Let's get on to you and talk about how you can create a really super easy dividend portfolio at M1 Finance. Now, here are the categories of pre-made portfolios here. General investing, which is like your regular robo-advisor with a variety of stock and bond portfolios. Plan for retirements, like your target date fund. Responsible investing is your socially responsible. But let's dig into the income earners, because that is where you can just dive in and decide what type of dividend portfolio you want. And they offer 3 different choices. You'll see the current dividend yield, and I happen to have the global dividend, as we've seen over 5 years, that actually has gone up the second highest amount in value, but currently has the highest dividend yield. So what we're looking at are 2 different things. One is appreciation of the value of the fund, and that's this column here. And then the other is the current dividend yield. So if you invested $100 in this fund, every year, based on that $100 price, should the dividend stay 3.04%, your portfolio would earn $3. You could take that $3 out in cash, or you can reinvest it to make more shares. So how do you choose which dividend portfolio is the best one for you? They're all medium to low risk portfolios. The bank balance sheet is a lowest risk, as are the 2 bond portfolios. And what that means is, when you think about risk, that means they're going to be a little less volatile and not have the likelihood of as larger returns, but they also will not drop in value as much. So if you have some investment goals that are, say, 5, 4, 3 years away, you choose one of the lower volatility dividend portfolios. Let's look at the bank one right now so you can kind of see what's going on inside. This is just an all bank ETF, and it owns 3 ETF funds within this. And these are all bond funds. So unlike your stock funds, bond funds are like bonds are a loan to a company. And for example, these are made up of mortgages. These are made up of treasury bonds, in which you're loaning money to the treasury, the U.S. Treasury. In exchange, they're paying you interest. And these are municipal bonds, where you're loaning money to municipalities, like cities, for bridges and roads and that kind of thing. And in exchange, they pay you an interest rate. So this is a bond fund. It will behave differently than a stock fund, but it should have little less growth, lower expense ratio. And this type of dividend pie is really best for someone that is a little bit more of a conservative investor. Bonds typically are recommended for more conservative investors. But at the end of this video, I'm going to give you some tips, some ideas about bonds, because we're kind of in a tricky bond environment now. Now, the domestic dividend portfolio is medium risk. And this one you'll see has nearly doubled in 5 years, which is not bad. This is an all stock fund, and it's similar to my global income fund, except it's focused on only US stocks that pay dividends. It's got the majority invested in an appreciation fund, which means these are companies that have not been known to raise their dividend payments. Then we've got a mid cap and small cap dividend fund as well. And this is going to be typically a little more volatile than your all bond fund with a little bit higher yield. You've got 1.849%. And as the companies raise their dividends, so will your dividend payments go up. Okay, so let's look at a couple of the others. Global dividend we looked at. Long-term and mid-term bond funds, I don't recommend right now. And I will tell you why. Remember, I promised I was going to talk to you about bonds. Bonds are typically a way to kind of stabilize your portfolio. When stocks go up or go down, bonds typically will not change in value as much. But when we're in an environment like now, beginning of 2020, where the Federal Reserve is raising interest rates, bond fund values move in the opposite direction of interest rates. That means when interest rates go up, your value of the bond will go down. But to offset that lower value, the coupon payment or the interest rate that is paid on the bond on new bonds is going to go up. So it'll offset itself. But in the short run, with what we know is an increasing interest rate environment, I would recommend, if you choose to go with a bond dividend fund, go short term, because they're going to decline in value less than your long-term bonds will. And this is a decent option for money that you're going to need within the next 3-4 years, because you'll get a yield of 0.746, and you've got short-term treasury bonds, muni bonds, and corporate bonds. It's a little better than a CD. So the question is, are there any other dividend options at M1 Finance? And I'm going to let you in on a little secret. Here, just to sum up on the income earners, we've got 3 bond funds, bank balance, long-term bonds, and short-term bonds. Then we have 3 dividend stock dividend funds, the U.S. domestic, the global dividend. Oh, sorry, only 2 stock dividend funds and 4 bond dividend funds. I would suggest for now sticking with either a short-term bond fund or the domestic or global dividend fund. I'd shy away from long-term bonds, at least for the near term, until interest rates stabilize. But there's another expert pie that I stumbled upon recently, which had an amazingly high dividend payment. Now, these are the hedge fund follower choices in M1 Finance. And if you are not an accredited investor, and some of these funds require you to have hundreds of thousands or even more money in order to tap these funds, you can invest in a similar way to these hedge funds. And M1 has replicated the investment strategies of Berkshire Hathaway, Coatue Management, Greenlight Capital, Icon Paulson, Pershing Square, Tiger, and Value Act. And if you are looking for dividends, Icon Capital is a high-risk fund, but you'll see today has a 6.9% dividend. Now, I'm not saying put all your money here, and let's find out where this super high dividend is coming from. Well, it looks like they're investing in a lot of energy stocks, which pay really high dividends. Now, we know today that energy has catapulted in price, and likely so have the returns of the energy companies. That's likely to temper in the future. So this is a more riskier option. And I certainly would not suggest putting all my money in an option in a portfolio like this. But Berkshire Hathaway, who doesn't love Warren Buffett, if you want to try and invest like Warren Buffett, a super easy way to go is, look, these are very well-known companies: Visa, VeriSign, Coca-Cola, Kraft, Apple, Bank of America has a nice 1.2 dividend, no expense ratio, because they're all stocks. Okay, so there you go. You might want to choose this already made portfolio. But one more tip on dividend investing with M1 Finance. Let's say you don't want to go to a pre-made portfolio, or you want to choose a pre-made portfolio and then add in some high dividend stocks or ETFs. You can go right over to the research tab. And I prefer funds because I think stock investing requires a heck of a lot of work and a lot of diligence. And unless you've spent a lot of time educating yourself, funds are a better way to go. So let's just do a quick screen and look for dividend ETFs, which are exchange traded funds, and they own a whole bunch of different dividend paying companies. So I'm going to go with a dividend yield of a minimum of 1.5. And I don't know what's going to come up because I didn't do this in advance, on up to 3.0. And I'm going to see what kind of ETFs populate. But I don't like to pay high expense ratios. So I'm going to cap my expense ratio at 55 basis points. And let's see how many come up, how many holdings come up with these type of dividend yields. Okay, and it looks like we've got 2 pages worth. One is the bond fund, which has, this is BND, it's an all bond fund. It has a dividend yield of 2.25%. But what I did tell you still holds, with exception of short-term bond funds. You're going to lose a little bit of principal value when interest rates rise. So I kind of shy away from longer-term bond funds. Here's a value stock ETF, Vanguard, 2.11% dividend yield. Here's the emerging markets ETF, 2.91. Now you can choose a mix of these different dividend paying ETFs. You can add them into your M1 portfolio and craft percentages that you want of each ETF, or the customized portfolios. It's up to you. Here you see again the Vanguard Dividend Appreciation ETF, which was also included in the global dividend and the domestic dividend. So I've given you a couple of ways to build yourself a dividend portfolio with M1 Finance. But again, you can do a dividend portfolio on other platforms as well. The thing that I like about M1 Finance is I choose the asset allocation, or the percentage invested in each one of these either pre-made customized portfolios or individual stocks or ETFs. I went with a 50-50. And the nice thing is M1 Finance, when I put in money or I take out money, they will rebalance the portfolio and keep it in my 50-50 allotment. Now you can see the Global Dividend Fund has outperformed my 60-40 stock bond fund over the past, I'd say over the past actually while. And so now it's up to almost 52% of the global dividend and only 48%. So what I'm going to do right now is I'm going to just push this button and M1 Finance will rebalance my portfolio for me. Not while you watch, of course, but over the next day or so that my target, they'll sell some of this global dividend and they'll buy more of this. So my target will be closer to 50-50. That's a feature that you get in a lot of robo-advisors. You do not get that when you're investing on a typical brokerage website, unless you go with a robo-advisor. So I hope you liked this dividend investing introduction using M1 Finance as an example. If you have any questions, I love reader questions. List them below and I will answer them personally. If you like my channel, please subscribe. Give me a thumbs up. I've got freebies for you below. If you do decide, hey, M1 looks cool, I want to sign up. If you use one of my links below, it is an affiliate link, which means our company will get a small payment that helps to defray our costs and enables us to bring you this quality content. So thanks so much for showing up. I look forward to seeing you next time. Bye.